Here's another deep dive on Bang Si-hyuk and HYBE IPO. Why? Because the case is so confusing and the way, the Korean media is covering the issue is so twisted that I felt the need to explain it, a couple times. But this time in a more baby language-ish. Okay. So far, we have seen how certain outlets like Korean Economic Daily, 한국경제, have taken a highly emotional, almost personal tone in covering Bang Si-hyuk. But not all media are handling this issue the same way. Like I explained in this video with this thumbnail, a specialized financial media outlet called DealSite has conducted a deep dive where they laid out a detailed timeline, not just about stock transactions and fund movements, but also of the motivations, pressures, and financial structures that led up to the current quote-unquote crisis. Now, another media outlet called The Bell, which is actually a pretty respected publication in Korea's financial world, is doing a series titled Reviewing Bang Si-hyuk's Legal Issues. Okay, The Bell is similar to DealSite in terms of their approach to journalism. Unlike more click-driven headlines, The Bell positions itself as a market-focused outlet that tracks major deals in M&A, IPOs, and the movements of big financial players, including PE firms and pension funds. And their tagline literally translates to wherever there's a deal, the bell rings. So instead of emotional judgment, their focus is on the deal structure, how profits were divided during HYBE's IPO, whether general investors were harmed, and whether the legal case has any real basis. And even their editor's note for this series points out that many experts believe the financial watchdog may be overreaching, trying to force a fraud charge where there wasn't one before. And let me translate this. Editor's note. Controversy is growing after HYBE chairman Bang Si-hyuk was reported to financial authorities on charges of fraudulent transactions under Korea's Capital Markets Act. The key allegation is that during HYBE's IPO in October 2020, Bang Si-hyuk misled existing shareholders and unfairly profited as a result. But many experts argue that the case is built on issues that were previously deemed non-problematic, raising concerns that the charges are being stretched beyond reason. So what is the objective truth behind this case? The Bell examines the key points of contention, focusing on how profits were distributed during HYBE's IPO and whether general investors were actually harmed. So the series consists of 5 articles, but in this video, instead of doing like a literal translation, I will digest this and tell you in a more easily understandable language. And I have also come up with visual presentations so you can understand better. And I think after going through all these 5 articles and watching this video, you could become like a semi-professional, semi-expert on this case. And you will learn much more than simply reading through all the K media articles, I feel like. And much of the content to be covered in this video has been discussed during this video, but I will try to make it more digestible. All right, so let's start here. The title of the article is something like Deceit versus Voluntary Exit. What really happened with HYBE's early investors? Okay, now the key question in the ongoing legal case against HYBE chairman Bang Si-hyuk is this: did he deceive HYBE's early investors in 2018 into selling their shares at a lower price by pretending the IPO wouldn't happen anytime soon, only to later profit from it when HYBE went public in 2020? That's the key question, right? Now, to prove that, prosecutors would need to show that the investors were tricked and that they lost money as a result. But according to the facts revealed in this article from The Bell, the investors weren't deceived, and they actually made massive profits. Okay, so what actually happened? So there were 3 key early investors. First, LB Investment. and they had to sell because the fund was ending. So LB was one of HYBE's earliest investors. They invested about 6.5 Korean billion won in total, which is about $5 million. And their fund was set to expire in 2019. So they had to sell HYBE shares no matter what. They started selling in 2018 and finished in 2019. And they sold their shares for over 115 billion Korean won, which is around 90 million USD, earning a massive 1,671% profit. Let me repeat that. 1,671% profit. In fact, it was LB Investment who asked HYBE for help selling, not the other way around. Okay, so that was the case number 2. Case number 2, Alphenroute Asset Management. Now, they needed cash quickly because of the so-called Lime crisis. Okay, so they bought 2.33% of HYBE for around 18.7 billion Korean won in 2018. In late 2019, they sold all their HYBE shares for around 50 to 60 billion Korean won. Again, which is a very healthy profit. Now, why did they sell? Because they were under extreme liquidity pressure due to the 2019 Lime asset management scandal, which was a big financial crisis in Korea's hedge fund world. And Alphenroute had to urgently raise cash, so they sold multiple investments, not just HYBE. Okay, so that was a case number 2 in terms of the early investors of HYBE who sold their shares. How about case number 3, Legend Capital? Now, this one is very interesting because they believed in HYBE and stayed in. So Legend didn't sell all their shares. They only sold 3.88% in 2019 and kept the rest, which is about 6.2% until HYBE went public. And that means they likely made even more money after the IPO. And as one expert said in the article, according to the article, if Legend had truly been deceived, they would have sold everything, but they didn't. Okay, so what's the point? Despite the accusations from the Korean government, The Bell points out that there's no evidence that these early investors were misled. Okay, and they didn't suffer financial losses. In fact, they made huge returns. And many of them sold for reasons like fund expiration or external crisis, not because of anything that Bang Si-hyuk said. Okay, so that was the summary of the article number 1. Article number 2 in the series. The question is, did Bang Si-hyuk hide a crucial contract before HYBE's IPO? And this article was released to answer that question. Okay, the title is Undisclosed Earnout Deal, Legal Violation or Standard Practice. So, what is this article about? At the center of the legal dispute is something called earnout contract between Bang Si-hyuk and HYBE's private equity investors before HYBE went public in 2020. Now, the controversy is about whether this contract should have been publicly disclosed in HYBE's official documents before the IPO. Bang Si-hyuk and HYBE didn't disclose it, but not because they were hiding anything. They consulted a major law firm who told them the contract didn't legally need to be disclosed. Still, financial regulators now say it might have been misleading to leave it out. So what was this contract and why does it matter? Okay. First, what's an earnout contract? The article explains, an earnout is a deal where one party agrees to share profits with another if certain goals are met. And in this case, if HYBE successfully went public, certain goals would be met. And here's how it worked. In 2018, private equity firm Stick Investment bought HYBE shares. As Stick said, if HYBE doesn't go public by 2023, Bang Si-hyuk must buy back our shares. So that becomes something called a put option. And that was a big risk for Bang Si-hyuk. So Stick Investment offered a trade. saying if HYBE does go public and we profit, you, Bang Si-hyuk, will get 30% of our gains. And that was the earnout deal. Later, two other investors, Eastone PE and New Main Equity, used the same terms. So this was a mutual risk-sharing agreement, not something that Bang Si-hyuk forced on anyone, explained the article. Now, why wasn't this disclosed? That was a key question, right? So here's what happened. The article explains, when HYBE filed its IPO documents, the earnout deal wasn't included in the public version. But HYBE did disclose the deal to NH Investment, which was their IPO manager, and lawyers. Okay? And after a full legal review by top law firms, they decided that this deal did not need to go into the official IPO disclosure, called the Securities Registration Statement. And at the time, 2020, this was standard industry practice, the article says. There were no clear rules saying this kind of contract had to be disclosed. Even the Korea Exchange, which approves IPOs, raised no objections at the time. Now, only recently, years later, have some companies like Daehan Shipbuilding started disclosing similar contracts voluntarily in their IPO filings as transparency expectations evolve. So, what's the legal debate? The key legal question is, did hiding this deal cause harm to investors? If the answer is yes, HYBE could face legal consequences, but it's kind of complicated because one legal expert in the article said this was just a profit-sharing contract. It didn't affect company control or day-to-day operations, so it's not something investors needed to know. Another expert, on the other hand, said, still, in the interest of investor protection and transparency, maybe it should have been disclosed. Now, the court will need to decide if this was a material fact, something so important that it could have influenced someone's decision to invest in HYBE. Now, the article basically highlights that the deal was not secretively made, but reviewed and approved by legal and financial professionals at the time. And it was a standard private equity practice to balance risk. And there's no evidence investors were harmed or that the public was misled in 2020. Now, the controversy, now lies in how law should be interpreted today versus 5 years ago, and whether Bang Si-hyuk and HYBE should be held responsible for decisions that were considered standard and legal back then. Okay, so that was the article number 2. Article number 3 in the series was reported to answer the question, did Bang Si-hyuk mislead early investors before HYBE's IPO? And here's the title, IPO delay, strategic move or misleading signal. So what is this article about? The core allegation in Bang Si-hyuk's current legal case is that he misled HYBE's early investors in 2019 by downplaying or delaying news of HYBE's IPO plans, supposedly to buy their shares at a lower price, only to launch the IPO later and benefit from the stock's success. But this article explores a much more complex picture. It raises this big question. Was the delay in IPO planning a trick? Was the delay in IPO planning a trick or just the result of shifting business realities? Okay, so what exactly is the accusation? Financial authorities claim that Bang Si-hyuk told early investors that HYBE's IPO would be delayed or that there was no plan for one, which led them to sell their shares to private equity firms, and that Bang Si-hyuk personally profited after HYBE eventually went public. But to legally convict someone for fraudulent unfair trading, the prosecutors must prove intent, that Bang Si-hyuk knowingly lied to investors and caused them to believe him and personally gained from it. Right? So the big question is, did Bang Si-hyuk really lie, or was he just adapting to changing financial conditions? So to figure that out, we need to know some context. So what was going on in 2019? Back in 2019, HYBE, which back then was Big Hit Entertainment, needed a huge amount of money, which was over 1 trillion Korean won, which is around 750 million US dollars, to expand into the US market. Okay, and they considered multiple options for funding, like getting investments from abroad, like Vision Fund by SoftBank, or taking on debt, or going public, aka IPO. At first, Bang Si-hyuk preferred foreign investment because IPOs come with a lot of scrutiny and control. So he pursued a deal with SoftBank's Vision Fund, which ultimately fell through by the end of 2019. And with that deal dead, and money still urgently needed, the IPO became the next best option. So around January 2020, HYBE began the formal IPO process. Okay, they sent RFPs, which is bidding requests, to security firms, chose NH Investment and Securities and Korea Investment and Securities as co-leads by February. And by April, those firms had employees stationed at HYBE headquarters for on-site due diligence. And this was the start of what became the October 2020 IPO. Now, what about the timing of the share sales? The alleged, quote-unquote, misleading share sales to private equity investors happened in November 2019, before HYBE fully committed to the IPO path. And at that time, Bang Si-hyuk had not yet chosen an IPO lead manager. He was still working on the SoftBank deal, which failed later in December. Okay, and this timeline matters because it shows that IPO wasn't yet a confirmed path in November. Okay, so it's hard to say Bang Si-hyuk intentionally lied about a plan that wasn't official yet. But the question is, didn't HYBE start some IPO preparations earlier? Yes, but there's an explanation, the article says. In August 2019, HYBE appointed a designated auditor, which is a required step in preparing for an IPO. And this raised questions. But HYBE says this was not initiated by the company, but requested by an early investor. And who was that? That was Legend Capital. And that investor wanted HYBE to go through this step to show its potential to future backers. Okay? And the article says emails confirmed this request was shared with other investors too. So it wasn't part of a secret IPO push by Bang Si-hyuk. It was to satisfy investors' due diligence, according to The Bell. So the question is, did Bang Si-hyuk mislead anyone? It's unclear, the article concludes. And that's why this is in court. And the article suggests IPOs are uncertain and multi-year processes that often change direction. And publicly declaring an IPO too early can be risky and even legally problematic if the plan later falls through. And at the time, HYBE was still evaluating its best option and wasn't legally required to disclose tentative plans. Experts also note that judging this case without understanding how IPOs typically work in Korea in 2019 could lead to misunderstandings, the article explains. Okay, so in short, this particular article says, yes, shares were sold before the IPO, but the IPO wasn't finalized yet. HYBE was still exploring other paths, and IPO preparation officially started after those sales. And early steps like appointing an auditor were investor-driven, not evidence of a secret plan. And there's no smoking gun proving Bang Si-hyuk intentionally misled investors. All right. Now, the next one, article number 4, answers the question: did regular investors, like retail investors, get burned in HYBE's IPO? The title is "Only Retail Investors Lost Money: Normal versus Shady IPO Behavior." Okay, so what is this article about? When HYBE went public in October 2020, a lot of retail, individual investors, especially BTS fans, bought shares on day one. Okay, but the stock quickly dropped. Some people now argue that certain private equity funds made big profits while regular investors were left with losses. And this article asks, was this just how IPOs usually work? Or did something unfair happen to everyday investors? Okay, so again, what happened on HYBE's IPO day? HYBE's IPO date was October 15th, 2020. IPO price was set at 135,000 Korean won per share. Opening price was doubled, 270,000. And it hit a high of 351,000 Korean won within 3 minutes. In Korea, we call it dasang when IPO price doubles. And there's a limit up to 30% in the Korean market. And the closing price was 255,420 Korean won. Okay, already a 27% drop from the high. All right. Now, real retail investors, especially fans and everyday traders, rushed in and bought 160 billion Korean won worth of shares that day. But those who bought at the peak lost nearly 30% in just one day. All right. Now, the question is, who sold during this drop? Several large investors like Stick Investments, Mainstone, and Eastone PE, who had early shares in HYBE, some through deals with Bang Si-hyuk, sold large amounts of stock on the first day. Okay, and they weren't subject to lockup rules that restrict selling right after IPOs. For Mainstone and Eastone PE, they sold 130 billion Korean won worth on day one. Okay, and combined total was 190 billion Korean won, including Stick Investments. The sale prices were from 288,000 to 312,000, much higher than the IPO price. So by the end of day 4, Mainstone and Eastone had sold almost half of their shares, totaling 234.9 billion Korean won. Okay, but what's the issue here? All right. First, there's something called overhang effect. When a lot of stock hits the market suddenly, it creates downward pressure on prices. And this is exactly what happened. And there were no lockup agreements. While Stick Investment agreed to a 3-month lockup on 70% of its shares, Mainstone and Eastone did not. And they, quote unquote, dumped their stocks. And thirdly, there were undisclosed earnout contracts that we discussed. These funds had private contracts with Bang Si-hyuk to split IPO profits, but this wasn't disclosed to the market. And that lack of transparency is now under ethical and regulatory scrutiny. So was HYBE's IPO crash unusual? That's the next question that the article asked. And the answer was not really, because at the time, Korea's IPO market was caught in a so-called dasang craze, where investors expected IPOs to double, then hit limit up. Okay, for example, SK Biopharm and Kakao Games, which IPO'd right before HYBE, surged for multiple days, and people expected HYBE to do the same, like dasang, which means double and then 2-day limit up. But HYBE stock fell and hit 140,580 Korean won within 12 trading days, which is a 45% drop from its day one close. And some argue that the crash was just part of typical IPO behavior. Like stocks spike, people take profits, and prices, fall back. And HYBE's 28% float, like shares available for trading, was within a normal range. Anything under 30% is generally not considered high risk for high risk for supply-demand imbalance. Now the question is, so why is this being talked about again now? That's because Bang Si-hyuk is under investigation, and people are re-examining whether retail investors were unfairly treated in Hive's IPO, especially since some PE funds made a killing right away. And the fact that their profit-sharing deals with Bang Si-hyuk weren't disclosed at the time makes the situation more controversial, the article explains. If those contracts had been known, the stock exchange might have required a lockup, preventing immediate selling. And retail investors might have been more cautious before buying in, although I personally don't believe that would have been the case. Now, so in summary, the article says retail investors lost money, but the stock movement wasn't totally abnormal for a hot IPO. But the lack of transparency and early fund sell-offs did create a situation that felt unfair. And whether this was just how markets work or something more unethical is still up for debate. Okay? And yeah, there you go. So that was article number 4. And last but not least, here's article number 5. Answering the question, what's the deal with this something called Eastone PE and why it matters in Bang Si-hyuk case? Okay, the title is a pre-planned fund deal, or just helping friends. All right. So this article is about this. At the center of the legal investigation surrounding HYBE chairman Bang Si-hyuk is a private equity fund, PEF, called Eastone PE. And this article takes a closer look at how this fund was created, who was involved, and why prosecutors now believe the setup was more than just financial help. It might have been fraud. Okay. First, who created Eastone PE? So Eastone PE was founded in April 2019. Two key people in the spotlight were Kim Jung-dong, who was a former HYBE Chief Investment Officer, aka CIO, and Lee Seung-seok, also a former HYBE executive. Now, Kim Jung-dong wasn't just any investor. He had a long-standing relationship with Bang Si-hyuk. And as an early backer of HYBE, Kim was even a board member for 8 years before officially joining the company as CIO in 2020. And Kim Jung-dong helped HYBE grow through early investments and was involved in strategic projects like the Playdays acquisition, Playdays Entertainment. And in 2019, when existing investors wanted to sell their shares, Bang Si-hyuk turned to Kim Jung-dong for help, and he offered to set up a fund to bring in new investors, and this became Eastone PE. So why is this a problem now? Here's where it gets complicated. The Securities and Futures Commission, a Korean financial regulator, believes that this wasn't a normal investment fund. They claim that it was a pre-planned fund, which is set up to make guaranteed profits for Bang Si-hyuk and his close circle. The most serious concern is that private contracts between Bang Si-hyuk and Eastone PE were never disclosed to other shareholders or the market. And these contracts included, like I said, a put option. If HYBE didn't go public by a certain date, Eastone could force Bang Si-hyuk to buy back their shares, and an earnout clause. If HYBE IPO succeeded, Bang Si-hyuk would get 30% of their profits. And prosecutors argue that this arrangement made it look like a normal investment deal on the surface, but behind the scenes, it was carefully designed to benefit a small group. So the question is, did Eastone hide anything? Yeah, kind of. According to the article, Eastone PE bought large amounts of HYBE stock from existing investors in 2019 and 2020. But the sellers, previous investors, didn't know about the fact that Bang Si-hyuk's close ties to Eastone's founders and the hidden profit sharing contracts, the earnout agreements. And this has led some people to say that the original sellers were misled. If they had known about the setup, they might not have sold their shares. Now, what about this? Did this happen while Kim Jung-dong was already working at HYBE? And this is the picture of Kim Jung-dong. No. The article clarifies that Eastone PE was created and bought HYBE shares before Kim Jung-dong joined HYBE as CIO in March 2020. Okay, and Lee Seung-seok, another Eastone member, officially joined a HYBE subsidiary in April 2020. So Technically, Eastone made its investments before these people became HYBE insiders. But because of their long history with Bang Si-hyuk, regulators believe the intent was always there. So the question is, what's the legal issue here? At the heart of the case is this question: was Eastone PE just a fund helping HYBE find new investors? Or was it secretly controlled by Bang Si-hyuk to manipulate profits from the IPO? If the second option is true, then it could be considered fraudulent behavior under capital markets law. And so overall, this article says that a HYBE insider helped create a fund, Eastone PE, that bought shares from older investors using quote-unquote secret side deals with Bang Si-hyuk, and these private contracts promised big profits if HYBE went public, but no one else knew about them. And now the government is trying to prove that the whole setup was not a regular business deal, but rather a pre-arranged scheme to benefit Bang Si-hyuk and his allies. Okay, so that's it. There we go. I thought that this series was pretty balanced, trying to dig into the whole case, to really uncover what really happened back in the day, right, around 2019. And yeah, it didn't really try to, purposefully defend HYBE or Bang Si-hyuk, but rather trying to lay out facts that other K-media agencies are not really bringing up when they cover this case. So hopefully this was informative for you, and congratulations for now having become semi-experts on this case. So what do you think? Does reading this series and watching this video change your viewpoints of this case, or Bang Si-hyuk or HYBE? And what do you think about the whole case and the Korean media and regulators' reaction to the quote-unquote controversy? Leave your comments if you want to discuss, and as always, let's stay positive, respectful, and classy when you do that. All right, peace and love. Bye-bye.